Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Neil Kyle on the line, and he's founder and general partner over at Grain Ventures. Neil, welcome to the show.
It's very good to meet you, Adam. Thanks for the time. Looking forward to a good conversation here.
All right. So good to have you on and excited to get into Grain Ventures and what you're doing and talking about value creation, how much of this happens maybe before IPO. So excited to get into that and more. But before we do, tell me a little bit about you. Like, how'd you get started in this business? Like, where'd the finance stuff come from?
Yeah, makes sense. Well, I spent the first chapter of my career at a company called Danaher Corporation. It's a Fortune 30 company. And it's like an industrial conglomerate. And I was evaluating, executing, and integrating acquisitions across life sciences, diagnostics, aerospace, semiconductors. So I looked at like hundreds of companies. I learned how to underwrite the business from inside out. And got trained in a very disciplined first principles approach to diligence and value creation. After that, I moved into a senior strategy and corporate development role at a company called Cencora, which is a Fortune 10 healthcare company where I focus on large-scale technology-enabled platforms and M&A. And throughout that journey, I kept noticing something, that the most extraordinary returns in investing wasn't happening on public markets. They were happening years before a company ever went public.
And that's interesting.
Yeah.
Go ahead, please. Mm-hmm.
No, and the access to these opportunities was almost entirely locked behind institutional walls. So I built Grain Ventures. It's a way to bring that institutional underwriting mindset to a curated group of investors who want to participate in the private markets before the IPO. But on a deal-by-deal basis and with full transparency and no blind commitments. So, that's how I kind of got started.
That's super interesting. And what interests me a lot about what you're saying is I want to stay in the early years a little bit longer. Like, what was that like? Because you almost went through like, I'm using these words, you didn't, but you went through like a boot camp in your early career, a boot camp of analyzing and evaluating companies before getting into this. So I feel like that boot camp is, led into what you're doing, like to being able to understand where the true value was. Am I off on this? And can you go maybe a little bit deeper into if that's correct?
No, for sure. If you or any of the listeners want to look into some of the best performing mergers and acquisitions companies in the world, there are two companies that are going to pop up that have the most amount of white powder, essentially cash, to do acquisitions, and companies that do it extremely well. Danaher is one of those companies, and they have a system called Danaher Business Systems, again, very popular with Wall Street, where they do very disciplined first principles-based approach to look at a market and then kind of understand what are the rules of the game, what are the external drivers, what does the winner look like, and kind of take a market-first approach before going into assets and backing into assets. And I did that for about 12 years and hundreds of deals.
You said 12, 1-2, right? 12.
Yes.
I just want to make sure that's right.
12.
Yes. In that 12 years, you don't have to be exact, but I'm just like quantity of things that came across your desk in terms of companies. If you had to ballpark, what would you say?
A number of companies? We probably looked at, inbound opportunities, probably one or two a week. So 52 weeks, you're looking, that kind of adds up. Out of those, and very few are going to think of it like a funnel-based approach, right?
Yeah, I was just talking top of funnel, like how many came through your desk. So well over 1,000. We're talking well over 1,000 just based off of the numbers you just said over 10 years, right?
Yeah, for sure. And, some of them are like bolt-ons or tuck-ins, and then some of them are large standalone operating companies. But in an exciting space, lots of calories burned through those years. And then
I like when you say that. Lots of calories burned. Go ahead.
Lots of calories burned, lots of heartbreaks as well, because you work on these deals, you're away
Mm-hmm.
from your friends, family, your kids,
Of course.
and then they don't go through.
Mm.
So sometimes it's not something you did wrong, but just
Yeah.
because the analysis showed that that's not the right thing to pursue. So,
I
and
feel like
then I took that.
a lot of disciplines built through those processes and constraints and ups and downs. Am I off on that? Like, I feel like there's a lot of discipline.
Oh yeah, extremely disciplined, very data driven,
Mm-hmm.
continuous improvement, mindset driven work that kind of goes into these because you're adding inorganic firepower to grow a company and grow a business, and it's always difficult to bring two things together and make them integrate properly to get the right synergies and bring growth to your shareholders. So yeah, that was fundamental. And then I still work in corporate M&A. I work at Cencora. It's a Fortune 10 healthcare company, about $325 billion in annual top line, where I oversee M&A for them, mergers and acquisitions for them. So I continue to stay plugged in because when I'm in those meetings, when I'm in those deals, I'm sitting across the table from some of the largest VCs and PE funds and investment banks. And I developed those relationships, which relationships helped me build Grand Ventures because I can leverage the same relationships on my day job to turn them into access points for Grand Ventures.
Yeah, it makes total sense. And I want to just pivot slightly to let's get into what it means to actually to have the conviction to deploy capital. Like, what does that look like in your process?
Yeah. So here's the trap most investors kind of fall into. They put money in and then they start building the story for why it was a good idea. It's actually, if you think about it, that's actually backwards. Because once your capital...
When you say it like that, Neil, it sounds pretty obvious, but you're right, though. Go ahead.
You're right. Because once your capital is committed, you're not analyzing anymore. You're defending, right?
And you're justifying, why it was... Nobody wants to be wrong, right? Go ahead.
Nobody wants to be wrong. So, every piece of news gets filtered through, I hope I was right, So that's why the work has to happen before the wire goes up. For me, that means understanding the company's actual position, not the hype, but really grounding in the fundamentals. Who's buying what they sell and why? What the path to liquidity realistically looks like, where the risk actually sits. And by the time I'm ready to deploy, the conviction is already built. And the capital is just sort of an expression of a decision I've already made. So the tell is simple. If you can't clearly explain why you are in before you fund it, you don't have conviction. You have the fear of missing out, and you have fear of missing out while you're wearing a suit. So that's about it.
Man, that's good. And I feel like those principles you're talking about, I feel like that goes to so many things. So you can apply that to relationships, marriage. You got to do the work beforehand, right? If not, you're just justifying. I hope I chose the right one. I hope this was the right, same concept. Makes a lot of sense.
Yeah, because the way I think about it is you have to have conviction. And you have to know why. You need to ground yourself on that. So,
and you also, so conviction's one side for sure, but then the other part, I think there's also, and I don't know, it's kind of this myth around just if you have access, then you're in the right rooms, then automatically that should be a filter of sorts, and maybe that's right in some senses, but access doesn't guarantee returns, right? It's not going to guarantee.
No, you're absolutely right about that, and this is the one I would push back on the loudest, even in my own industry, because there's been this explosion of access. Yeah. Anybody can get into a pre-IPO name now if they really want to.
It's become almost. Would you say? I'll take it one step further. It's become almost marketing now, access.
It's become marketing.
Just the way. Yeah. Go ahead, please. I feel like it crossed over that line already. It's become marketing.
It's become marketing because there's tons of brokers that will, pop up on your LinkedIn feed or Facebook feed, and they'll be like, oh yeah, we have access to X, Y, and Z. But what that means is that access to a bad deal has also become very fast. And so getting in isn't the edge. Getting into the right things is the edge, right? So the real work isn't sourcing. The real work is actually saying no. You know, I get tons of inbound opportunities for Grain Ventures all the time. And then we take those opportunities and we filter in our handful of high conviction areas and the guardrails that we have put in to understand what is truly a sustainable differentiation here that can be defended for long periods of time. How do I truly understand that this company, in the next, let's say, 24 to 48 months, is in a position to really maximize ROI because it has all the moats that you need. So for us, every deal I bring to my partners, there are many that I pass on because the price doesn't make sense, or the structure is ugly, or the path to liquidity is a fantasy. So my job isn't just to be like a turnstile that lets people into whatever is hot. It's to be a filter. The value I add isn't the door. It's the judgment about which doors are worth kind of walking through. So yeah, to your question, or to your point, if access were the whole game, everyone with a brokerage account would be rich. They are not. Selectivity is what really separates the portfolio from, let's call it, a pile of lottery tickets.
Wonderful. Neil, last question. I want you to go further into what you're actually looking for. So meaning you mentioned selectivity, whether it's industry, size of company, like what kind of deals are you looking at?
Yeah. So the way kind of we work is a lot of value creation now happens before IPO. Think about the timeline. 25 years ago, a company like Amazon went public at a few $100 million in value, and public investors captured the run to almost $1 trillion. Today, that model has flipped. Companies are staying private a lot longer, 10, 15 years, and they're raising this massive private rounds along the way. So by the time the average company IPOs, a huge share of that growth has already happened. It got captured by the people who were in early and privately. The result is that the public markets, where most people invest, increasingly gets access after a lot of that upside is already gone. So if you really want that asymmetric upside, that has really moved upstream into the private rounds. That's the whole reason Grain Venture exists. We are trying to get qualified investors a seat at the table during the window where the value is actually being created, instead of after where it's already been priced in. So that's sort of where we come in and what we do to help people understand. It's a combination of like understanding why this is the right thing to go after, what mistakes they should avoid. If they really are interested in getting access, they should also pay a lot of attention to diligence and then make the decision for themselves. We do it on a deal-by-deal basis through a vehicle called SPV, where everything comes to you and you get to make the final call. It's not a fund. It's not a blind pool. There's no commitment. You can take a look at it and say, yeah, this is for me, Neil, or you might say, no, Neil, I'm going to pass. So it's all based on technical analysis, and that's how we kind of come into play.
Amazing. Neil, if people are interested and want to learn more or follow your journey on social or otherwise, how do they connect?
Yeah. So if anything I've said today kind of resonates with any of the listeners, and you are an investor who's been curious about private markets, but just doesn't know where to start, I would love to connect. The best place to learn more is on our website, which is www.grain-ventures.com. Ventures. You can also find me on LinkedIn under Neil Kayal. We share opportunities on a deal-by-deal basis, so there's no commitment required just to start a conversation. Yeah, come learn how it works, and we'll take it from there.
Amazing. And for everybody listening, just so you know, we'll definitely put some info in the show notes so that you can head right on over and connect with Neil. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day, we bring you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow button. And Neil, it's been an absolute pleasure. Thanks again for coming on.
Thank you, Adam. Thanks for the conversation. And thanks for the questions and comments as well. I appreciate it.